Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas.
Today we have an update on Granules. We maintain buy on Granules as it reported all-time high margins led by increased traction in value-added products. The management believes the contribution of the FDF segment will rise to 70% from the current 65% in FY24, and geographically the North American region will drive growth in the near term, followed by the European region in the mid-long term. The management has increased EBITDA margin guidance to 20 to 23% in FY25, driven by new product launches in high value products, increasing clinical trials in phase 3 and 4 from earlier phase 2 trials, commercialization of pilot projects of DCDA and PAP, and easing of input cost. Hence, we maintain our buy rating on the stock. At current market price, the stock is trading at an attractive levels of 18.9 times its FY25 and 15.6 times its FY26 earnings of rupees 23.4 and 30.10. Due to higher margin guidance driven by value-added products, we ascribe a PE of 18 times on FY26 estimated EPS of rupees 28.4 to arrive at a PE of rupees 515 per share. Next, we have an update on Ipca Laboratories. We upgrade to buy with a revised price target of rupees 1350 as Ipca reported higher than expected earnings. Sales growth can be attributed to the integration of Unicam's business, followed by strong growth in the domestic branded generics and generic segments. A healthy product mix and raw material cost rationalization led to increased gross margin to 66% and EBITDA margin to 16%. Going forward, the company expects growth to be driven by stable realization in the API prices, domestic formulation growth led by chronic segment, and pickup in the institution business. Additionally, the recent acquisition of Unicam's lab is expected to grow, driven by penetration into newer geographies such as Europe, Australia, New Zealand, Canada, and South Africa, resulting in an increase in EBITDA from Rs 100 crore in FY24 to Rs 225 crore in FY25. Higher profitability in Unicam business is expected to increase consolidated EBITDA margin to 18.5% in FY25 and eventually grow to 24% in 5 to 6 years. On account of the turnaround on Unicam business, we upgrade our rating to buy. Currently, the stock is trading at 30.5 times its FY25 and 23.6 times its FY26 estimated EPS. Due to the resurgence in US sales and a positive turnaround of Unicam's business, we ascribe a price to equity of 27 times to arrive at a price target of Rs 1350.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.